Shortly after, or earlier tonight, we saw the judge in the criminal case releasing that expanded gag order. In the civil fraud case here, the one where Trump was found liable for years of business fraud in New York, we have now learned that Trump has avoided financial disaster for the time being. He has posted a $175 million bond that prevents the New York Attorney General from seizing any of his assets as he appeals that ruling. Here tonight is senior Forms editor Dan Alexander. Dan, we're supposed to be talking about Truth Social and something else, but this breaking news just came down before the show. What do we know about how Trump secured this bond? Well, the company that helped him do it is called Knight Specialty Insurance Company. This is a company that's part of a group of companies owned by Don Henke, who's another billionaire. He's worth about $7.5 billion. Interestingly, Don Henke is also the largest individual shareholder, or was for several years, in Axos Financial, which provided two key loans for Trump against Trump Tower and his golf resort Doral down in Miami, back when he was facing sort of that debt crisis around the time that he came out of office. So 2 times you see this billionaire stepping in and saying, these are financial arrangements that I can do. I think that I can make money on these, and essentially saving Trump. Well, that's pretty remarkable that it's coming from someone that he has gone to before. Yeah, that's right. And Don Henke's kind of an interesting guy. He made his fortune in subprime auto loans. So this is somebody who's, comfortable with lending money to people that other people wouldn't necessarily want to give money to. He's a strictly numbers guy who's going to look at this and say, okay, yep, he's got the collateral, he's got the cash, which Trump does. I can, do this bond and we're going to make money on it. And that's the end of the story. And that's how Trump ultimately was able to secure this. Well, on that front, Trump had said a few things when this bond was reduced, when he couldn't pay what it was initially. But when it was reduced, he kind of had said he would use collateral or cash. Then he said pretty definitively one time leading court that he was going to do in cash. Do we know what was the case here? Well, this was a bond, so you would expect that it would be collateral that he had posted, and I would expect that the collateral that he posted with Knight Insurance was cash. And when I say cash, I mean liquid assets. So, you could take stocks, you could take bonds, you could take actually cash sitting in a bank account, all of which Trump has plenty. But if you add all of that up to sort of a liquid assets category, you're looking at roughly $400 million for Donald Trump. And now between this one and the Eugene Carroll one, the majority of his cash is now tied up in these bond agreements. And so that's going to limit his ability to grow or expand his business, even to operate his business very freely. That's interesting. And I mean, essentially what this company is doing is saying that if he loses the appeal and he doesn't pay, that they will cover that $450 million judgment. I mean, but what this means, and as far as next steps, is that the Attorney General here cannot take any action for months against his properties until the appeal actually plays out. That's right. So Trump's properties will not be seized right now, which is really good news for him. The Attorney General had already started filing some documents that suggested that she might be going after even small assets. That could have been really, really disastrous for Trump, because if she had started seizing small assets, selling them at fire sale prices, and then collecting little amounts of cash via several assets, all of a sudden his empire could have gotten a lot smaller very, very fast. And now he's able to hold that off in hopes that he wins this appeal where he's maybe able to lower his judgment or something like that and be able to escape this without as much damage as he would have had if he had had to pay the initial judgment at the outset, or if he had had to go through the fire sale process. Well, one thing we had talked about, you and I, when it was, how was he going to pay the $500 million judgment that he clearly couldn't, was Truth Social and the fact that it was going public and it started trading. And he kind of stood to get this massive windfall from it, even though, as you correctly predicted, you said it didn't have the profitability that people were assuming it did. And when it actually went on the market, you predict that was going to change. I mean, we basically saw that play out today. Yeah, that's right. The stock tanked today, wiped $1 billion off of Donald Trump's net worth in a day. But that being said, a billion comes and a billion goes these days for Donald Trump. He's going to have a very, very volatile fortune because so much of it is tied to this stock. Now, this thing is going to trade like a meme stock. So yes, today there was bad news. They announced that they had lost a ton of money through 2023. Their revenues were declining on a quarterly basis. All the sorts of things that if you were a serious investor looking at the financials of this company would give you a lot of concern. However, in this case, it's going to be interesting to see how this plays out over the long term. I wouldn't be shocked, if the stock bounces right back up and then bounces back down and just sort of yo-yos around because it's so divorced from the logic or the numbers, the financials of this company. And it's still, although it came down a long way today, has a much longer way to go down before these numbers start making any sense. But I mean, all of this had to do is because this is a $58 million loss last year after a $50 million gain in 2022. I mean, what is that? How do people operate knowing what they know now that they can actually see the hard numbers about what Truth Social does or doesn't really have to offer? Yeah, well, the key numbers to look at here are what the operating profits are of this company. And what's really bad for Trump is that in the last quarter of 2023, the operating loss was roughly $5.3 million, which was up from its previous loss the prior quarter of about $3 million. And that looks like it's the largest operating loss since this company has started taking in revenue. That's a real problem. Now, when you get to the bottom line, there's a bunch of sort of financial instruments in terms of debt and converting to equity and that sort of stuff that goes into that final total. But if you look at the operating number, it's a much cleaner number and it doesn't look good for Trump. Now, keep in mind, the sorts of people who are really excited about